Welcome to the Practically Speaking podcast from Independent Advisor Solutions by SEI. In this podcast, we help advisors find solutions and share best practices for practice management, technology, social media, improving the client experience, and working with millennials. Our team share insights, experiences, and tools learned working with advisory firms across the country. Join us on this journey as we uncover the best practices to provide financial advisors with solutions to help advisors grow, differentiate, and create efficiencies in their businesses.
Hello and welcome to another Practically Speaking podcast. Today, we've got John Anderson, the head of practice management, and we're going to talk about the next wave of advice management. Now, just the title of this, John, has me really kind of grinding my gears. What do you mean about advice management?
First of all, thanks for having me again today. This is a great opportunity to kind of talk about a bunch of different things that we're working on here. I think I want to start by maybe putting it into perspective. So 2018 was a year that we really wanted to look at the changing client, the changing and evolving client-advisor relationship. What we wanted to point out is that we felt that the business is changing from an advisor-centric world to a client-centric world. And in context, we wrote 3 white papers. The first one being the next wave of advice management. The second one being fees at a crossroads revisited. And the third one on high net worth households and how to service high net worth households. So the philosophy of all 3 papers really starts with this first one, the next wave of advice management. The concept behind it is very simple. In this evolving time, advisors are looking to deliver customized, personalized approach to planning for their clients. Yet in doing that, they have to find a way to do it in a way that's scalable, one that's mechanized. So the question that we sought out in this particular paper was, how do I customize the outside, the delivery of the advice, yet mechanize the inside of my advisory business?
Wow, you just opened up a huge can of worms. I mean, how do you begin? I mean, that sounds like a huge undertaking.
It was, and it was quite a lot of fun, actually. We started the paper back in the fall of 2017 when we started doing our proprietary research. We started off with about 542 financial advisor respondents. We looked at 46 individual firms that we did a practice assessment. The paper was written by myself, Rafe Lee, who's written most of the white papers with me, but we also worked with Spencer Siegel, who's a CEO and the founder of Actify, which is an industry-respected thought leader. What we wanted to do is we wanted to, first of all, take a look at this evolution of advice. We wanted to take a look at where advice started and to where we are today. We wanted to talk about that client-centric model, what's changing in the business. And then we really wanted to get into and dig down deep into how advice is being delivered differently and how advisors are using financial planning software, workflows, and tools to create that mechanized, that back office scalability, if you will.
Well, let's talk about the evolution of advice. What did this research really glean, and what were you able to pull from interviewing all those people?
Well, when we started, if you think about the financial advisory business or financial planning business, if you will, you really kind of got started in the late 70s, early 80s. As you think about the 80s, when you think about financial planning, a lot of it was product-driven sales. You saw people that were using financial planning as a way to gather information, but the answer was typically some sort of benefit, insurance, or maybe even a limited partnership. As it evolved into the 90s, we started seeing more asset management take place, more AUM take place, and advisors were using financial planning still to gather assets. But in this case, it was more AUM instead of loaded products. It really took until about the late 2000s really to start moving into this, what I would call this golden age of financial planning, where financial planning is really what the value of an advisor's office is. A lot of times I talk about the fact that investments have been becoming more and more commoditized. There's more products than ever anymore. And the difference between one product and another product may be negligible. What clients are looking for is they're looking for advice. They're looking for this customization of advice. They're looking for this personalization of advice. And that's something that you can't package. So when we see this evolution of advice, what we're really seeing is this industry change coming from the fiduciary movement, coming from low-priced digital advisor disruptors, this changing demographic, and again, that commoditization of advice. So consumers are beginning to demand more participation, more transparency, and more value. And that's really kind of where we see this business moving today.
You brought up fiduciary, which is one of the big things that is driving evolution. you talk about how it went from an advisor-centric world to a client-centric model. Would you mind elaborating on that?
Actually, that's a great segue because I love to tell the story about how this has really evolved. And the story that I always start with is, so I grew up in a small town in central Illinois. One store, maybe two stores, depending on what you were looking for. But when I wanted to go as a kid, if I needed to, for example, go get a new pair of shoes, I would go up to the store and I would basically look at the inventory of the merchant. I'd be subject to maybe 3 or 4 pairs that were in my size. As I got older, we could go to a mall, but I was still subject to the inventory of whatever merchant it was. And maybe I had 5 stores to choose from, but at the end of the day, it was still whatever inventory was out there. If you think about the advisory business, most advisors got started because they were the local advisor in town. They got a referral from somebody who was maybe a neighbor or a friend of one of their clients. The client came in and they started to build that book of business. They started to build that advice business. And it was easier back then, I think, to gain these clients. But if you look at what's happened to retail and you look at what's happened to advisory business today, it's dramatically different. So for example, I can go to Amazon, I can go to Zappos, I can get hundreds of different colors and sizes and brands and manufacturing. I can get all sorts of choice when it comes to buying shoes today, right? In the advisory world, advisors don't necessarily have a benefit of just being the only person in town, because clients can pick up the phone and they can get, a robo-advisor, a virtual advisor. They can shop online and find all sorts of different advisors that maybe not necessarily in their same zip code, but they have the ability. So if you look at kind of this evolution from advisor-centric to client-centric, clients are used to now getting exactly what they want. They want it the way that they want it priced the way that they want it, and they want to be serviced the way they want it. They're used to having this very unique experience. And what we're suggesting in this example is that advisors need to evolve into a more client-centric model, one that focuses on planning the way that the client wants to receive it, one that focuses on advice based on the client itself, not generalist information. And ultimately, and that was the next paper, how we're going to price it on behalf of those different clients as well.
You have a great bar graph here talking about the client experiences front and center. No single reason dominates for moving an advisory relationship. I was a little surprised at some of these, at their percentages. Would you mind just giving us a brief overview of this, and then we'll jump down to really what the future of advice is, in your opinion, because of all of the things that you just talked about, how people have such amazing opportunities for such selection. How do advisors embody that?
Sure. In the paper, one of the things that we looked at was again, why does a client leave their advisor? And it was kind of interesting because there was, as you said, no single reason dominated it. But it was typically things like not getting good value in terms of what was being paid for, not getting good advice, ideas, or information, dissatisfied with the return on investments, needed new advisor to meet certain more complex needs. What it really said to me is that there's no one dominant reason, but if you kind of add all those up, it's that the clients weren't being serviced the way that they wanted to, that they didn't see value in the relationship. And they looked at a way to say, I need you to understand me better, rather than just delivering this generalist information. So when I look at this solution here, I guess what we're really suggesting is that the advisors that are going to be successful in the future are the ones that are going to have more focus on a specific type or types of clients. One that is really going to focus much more on personalized, customized advice. And it's how the advisor is going to be able to deepen that client relationship and provide that more holistic advice. But again, in a scalable way.
Now you have it says client customization and advisor mechanization. And that is so clear to me on this side of the mic, but our advisors who are listening to this might not truly understand what you mean. Now, you've talked a little bit, I think, about the client customization, right? Changing the way that they're asking questions, making it actually holistic and using that word appropriately. But help us understand, you have a solution, right? I mean, you have a bunch of papers, but this is really one of the things that gets you up in the morning, is helping advisors get this sort of relationship in the way that you want to have it. Break that down for me. How does the Independent Advisor Solutions and how does SEI help with this future of advice management?
Well, I think, it's a way to start, first of all, visualizing what that future practice looks like. It's focusing on how we will collaborate with our clients and how we will collaborate with our providers. If you think about the inside versus the outside of the office, right? The inside is that office structure, the infrastructure of your business today. The front of office technology and the workflows that are going to be delivered by the advisor is really that mechanization, right? It's the CRM. And the CRM has really become the client hub. Everything with relation to every client needs to flow through that CRM. So in our case, what we've done is we've partnered up, for example, with Redtail. Redtail being the largest provider of CRM software for advisors. We've partnered them up and created individual workflows. Workflows, everything from changing a client's address to holding a client service meeting, and putting it into a place that you can, number one, show your work. So you can go back and look at, and here's all the things that I've done for the client. Again, that can help you with the fiduciary concept as well. But it really helps make sure that there's a repeatable, systematized process for everything that you do so that ball doesn't get dropped. We also look at, for example, that the financial planning software is really the value hub. It's what clients are seeking out. So again, we've partnered up in this case with two different financial planning softwares, fully integrated with MoneyGuide Pro, the largest provider of financial planning software in the advisory world, and a newer one, more of a startup firm called Advisor, which is a little bit different in the relationship, and we'll get to that a little later. But the whole idea of mechanizing that inside of the advisor's office, that front office technology, is that advisors are using technology today to do things differently. They're integrating all of their softwares, so it's a single logon, and the softwares are talking to each other. It's using risk tools that are more proactive rather than reactive, things like Riskalyze and other types of proposal systems that are out there. It's using document management and aggregation and even a client portal to trade information back and forth with the clients and their vendors to make sure that everybody's up together on the solution. Now, on the outside, it's really that client interaction, and that's going to be left more to the relationship between the advisor and the client. But I'd like to think about the mechanization that happens there too. Things like co-planning. Now, I love the idea of co-planning because it really helps to engage that client in this journey. Co-planning to me is, the days of the 3-ring binder and the 40,000-page financial plan doesn't exist anymore. What exists today is the ability for an advisor to sit down and basically show their work up on a screen or on an iPad or on a computer, basically showing the client and having them engage on these scenarios. Really, it's scenario planning more than anything else. And the client and the advisor together work on this rather than the advisor producing this large document. It's also a prospect to client engagement, because we think about, today when we think about a prospect, that engagement has to happen before they become a client. We have to show them exactly what that journey will look like. And then things like micro moments, the ability to work with that client ongoing, not just quarterly, semi-annual, or annually, but realizing that the financial planning process is a journey and helping them by communication with targeted real information, real time to that client on an ongoing basis. So that mechanization of that communication as well. So as I'm trying to describe here is really what I call this techno advisor, one that enables their business, one that leverages technology to provide the personal touch, but do it in a mechanized way.
Why don't you take us through 2 quick case studies? Because you have Dennis and Nicole here. Can you just put that into perspective for us? It's always good, I think, to utilize everything that you just said, because that was a lot of stuff. Tell me about Dennis and tell me about Nicole and how all of these things either work together or how you use them together. Is that okay? Sure,
absolutely. And one of the things that I like to do a lot with advisors that we work with, as well as just in general conversations, is we're practicing what we preach. We talk a lot about creating a persona. A persona is an ideal client. A persona is a hypothetical ideal client that you can kind of get your arms around. So what we did in this paper is we created 2 personas, Dennis and Nicole. Now, Dennis is our traditional client. Dennis is the retiring business owner, one that is focused on the family and the future, one that may want to buy a second home, one that's thinking about income down the road, everything that a traditional client would be looking for. Nicole, however, is somebody that most of our advisors won't be looking at. Early 30s, a couple of young kids, maybe a little student loan debt, just bought their first house, worried more about the income, a little bit about the future, but kind of that non-traditional client. So we created these 2 personas, and what we wanted to do is show what the implications were for planning on each one of those. So for example, you have the options in most cases. There's really 2 basic versions of financial planning software. There's cash flow based and there's goals based. In cash flow based, really the output is going to be a net worth statement, an income statement. In goals-based, it's going to be scenario planning. It's going to be what probability to reaching a goal. So either one of those types of softwares, any types of those ways of planning, probably work pretty well for Dennis. Dennis, as a business owner, very well may like that whole net worth and income statement. He very well may like to talk about goals-based as well. But when it comes to Nicole, we would probably suggest that goals-based is probably going to be more up her alley, one that's going to fit more down the way that she's thinking today. So immediately what we're starting to suggest here is that you may use one type of software, but it may not be appropriate for all of your clients or all of your prospects down the road. What we're also suggesting is that when you think about the different types of planning, maybe holistic, maybe comprehensive, maybe this big, huge plan also may not be suitable for everybody. So for example, Dennis very well may be a do-it-yourself type of investor. He may have done a very good job of creating his financial future. At the same time, he very well may want maybe a second set of eyeballs to take a look at it. So rather than saying holistic traditional plan, maybe this whole big thing, maybe for Dennis, we're going to use maybe a modular plan or a project plan. In other words, do a one-time financial plan for him and he can go on his way and not have to wrap it up into this all big AUM fee. Nicole very well may want modular planning or segmented planning. So when we think about planning as a whole, one of the things that we're going to have to pay attention to, again, if we're meeting the needs of this evolving client, one that's changing the behavior of our business, maybe we have to think about not being advisor-centric, being planning-centric and focused on what the type of plan the client needs rather than the solution that we have in our back pocket.
So, John, tell me a little bit about the glue of advice management. And you say here that the inside drives the outside. Elaborate, please.
What we're really talking about here is now beginning to think about that mechanization of the inside. So we've talked about how Dennis and Nicole, for example, want different types of planning. Well, if you think about adding different software, if you think about adding different types of meetings and things like that, it can be pretty confusing at this point. So one of the things that we have to think about is how do we begin to take that customized outside approach and then mechanize the inside? And that's really that glue that we're talking about. What we're really talking about more than anything else here is creating systematic workflows for your business. Workflows are a key ingredient to running the successful business of the future because as you have multiple different types of things that you're working on with multiple different types of clients, you're going to have to find one system that's going to be able to integrate all of it. And that to me is a set of workflows inside your CRM. Now, there's a couple of different ways that you can do a workflow. I've seen people that have written them out that look like a swim lane, right? If you think about, for example, the Olympics, and you're watching swimming on the Olympics, you have on the bottom of the screen, you have, the Australians, and the second to the bottom, you have the Americans, and the third, you've got the Russians, or whatever you want to say. Those are swim lanes. What people have done is they've diagrammed out individual processes in those swim lanes. So instead of Australia, maybe it's the admin. Maybe instead of the USA, maybe it's the paraplanner. And maybe the other one is the lead advisor. And you can diagram off where the handoffs go with regard to everything. There's a beginning, there's a prep for a meeting, there's the actual meeting, and then there's a follow-up meeting. So what we did was we sat down about 3 or 4 years ago and we wrote 43 individual workflows and had them programmed into Redtail. And the reason being is that we know very easily that most advisors are not going to go out and create their own workflows, but what they will do is they will edit ones that are existing. So when I think about doing workflows, what I'm really talking about is change management on behalf of the firm, about the ability for both the lead advisor and the admin to follow these workflows to make sure that no balls dropped, to make sure that they have the ability to get the information out to the client when it needs to get out, etc. And that's really the focus of really systematizing that office is starting with your CRM and starting with workflows put into your CRM.
But there are some big challenges just in implementing these sorts of things. So let's talk about really some of the younger firms. What are their struggles? What are the mature firms? Again, this seems to me to be an overwhelming thing to do, but so needed. So how do you wiggle your advisors off the couch and get them to start doing this? Now, obviously, you've already written the processes, but what are some of the challenges that you have seen that advisors in implementing this stuff through your experience that you can help with to smooth the road out?
The first one is there's probably going to be 1 or 2 people in the office that don't want to do change. It's a key person, it's an admin or an advisor that doesn't want to follow the way of doing it. I've always done it this way. When I talk about workflows, and it's kind of a boring subject, but when I talk about workflows, what I typically hear from a lot of advisors is, oh, I don't need this. It's just me, my admin, an associate or something like that. I don't need that. If you want to talk workflows, you want to go to that big firm down the street, that $5 billion RIA. They're the ones that probably need this whole workflow program. And I would argue that it's just the opposite. Because the smaller the firm is, typically, the more key person dependent that firm is. The more key person dependent that is, the more risk there is to that firm, whether there's a extended absence out of the office, whether there's an injury, an illness, or God forbid, a key admin leaves or something like that. The more you have these workflows built in, the more you've systematized the office, the more you can train somebody up into that firm, the more you can make sure that everything's done right every single time, no mistakes. And that's really what we're talking about here. Now, the challenge, of course, is maybe not everybody's going to be bought in, because change takes time, it takes commitment, it takes coaching. And one of the things that we do focus on when we talk about this whole bundled package, if you will, is to think about how do we help coach people through this process. And there is a coaching process that goes through that. We find a lot of younger firms want to do this type of system, thinks it's great, but then there's the challenge between what's important and what's critical. What's important is we get these things built. What's critical is when a client calls up and says, I need money out of my account, or I need to meet with you right away. So it's that balance between critical and important. For some of the older firms, it's the I'll get around to it syndrome. And there doesn't seem to be a lot of incentive for some cases. So again, I think that focusing on coaching and focusing on helping the advisor through this process together is the way it's going to be done. I don't know a lot of people that work out in their basement at 5 o'clock in the morning every single day. I do know people that will hire a personal trainer that will force them to get it done. And I think it's the idea of if you're self-motivated, you probably could get it done, but most people need that extra coaching, and that's where I think this becomes very valuable.
Even those people who are very self-motivated, a coach can still just help you bridge those times where you're feeling less motivated, which is one of the reasons I love that you guys write so much. You are constantly putting out content to keep people motivated and accountable. To wrap up today, you have some options here on the transition. Would you mind talking about those?
Sure. I think when you're looking at technology, when you're looking at your business, when you're looking at if you want to be this mechanized business with this customized approach, there's a couple of things that we want to look at. I think really the first thing that we would talk about is how are we going to interact with the clients? Are we going to have all of our segments be treated equally, or are we going to start separating those out? I'm a firm believer in separating them out, of meeting the needs of the client where they need to be met rather than what I think I can deliver. We want to question how we're going to service and how we're going to charge for these different models that are out there. And what modules do I want to start with? Especially if I'm doing modular planning, if I'm going to do college or debt planning maybe or something like that, it's a great way to get started. I very well may want to think about bringing in maybe a junior advisor to work with some of this modular planning rather than just trying to do it all myself. It kind of makes sense. We want to think about how this affects our planning approach, starting with my client review and what processes do I have in place and what additional staff do I need to implement, or maybe if I have too much staff, how I can rearrange their business. And I want to think about what I call that platform decision. What type of platform? Now, there's a couple different ways that people use platforms today. In our research and research from Actify, a majority of advisors basically have all of their processes and all of their procedures in their head. Not a very good leverageable platform. The next level of advisors are ones that maybe have written it down. Maybe it's a traveling checklist, or maybe it's a manual or something like that, but it's not necessarily followed as correctly. What we really want to get to when we think about choosing platforms is we want to talk about integration. And I don't mean integration where you share the same password. I'm talking about full, what we call level 5 integration. And that level 5 integration is where systems talk to each other. So an example would be a client calls up and says, I need $50,000 to pay a tuition payment. So you type in that client needs $50,000 in your CRM, it automatically sends a trade to your sales platform. It pulls money out of the portfolio. It places the trade. It sends the confirm to the client. It then sends the income to wherever it needed to go. It then sends a confirm back to you via the CRM and updates your financial planning software, all with only touching it one time. That would be what we call level 5 integration. So we have to think about the type of systems and platforms that we want to use together. And when you think about that, there's really a couple of different choices. You can be a do-it-yourselfer, and that's integrate all of the technology together to figure out how you're going to put these different systems together and to monitor them. You can hire a consultant to do that, or you can look at one of the third parties out there that have these types of software out there. And those are really the three choices. Now, there's impacts to both your client, your staff. There's impacts, there's pros and cons of each of those. And we get into those different impacts in our paper. So you can probably take a look at the paper and really kind of dig down deep into how you want to interact with the software and the planning that you want to do down the road.
We are definitely going to make sure that the paper link is in the show notes for the podcast today. But to close it up, why don't you give us the summary? Why don't you summarize everything that you said there? Just kind of put it in a nice little package. We'll put a bow on it, and then we'll wrap up today.
Perfect. Well, I think if we're going to evolve alongside our clients, if we're ones that are going to be in business 10, 15 years from now, we have to look at what the retail environment looks like and the advisory business looks like. And that's really delivering a customized, personalized approach to our clients, one that takes into consideration how they want to be serviced, one that takes into consideration how they want to pay for that service, and how we do planning for them. I think the future is looking at ways to customize the outside delivery of advice, yet mechanizing the inside of our office to make it efficient, to make it leverageable, and to make it scalable.
All right, John, thank you very much for your thought leadership today.
Thank you, Matt. It was great.
So today, we really took a deep dive into the next wave of advice management. After you heard all of this, I mean, there's some great takeaways here, but the big thing and the greatest takeaway, in my opinion, is you having access to information like this to make these decisions on your own, to feel like you have done your due diligence, that you crossed all of your T's and dotted all of your I's and asked yourselves the right questions. We will make sure that this paper that the whole team wrote, and of course, John Anderson, the head of practice management, was a huge aspect or an author of. We'll make sure that's in the show notes. But take a read at this. Take a look at all of the good information so that you can make an informed decision on where you want to take your practice. So for everybody at the Independent Advisor Solutions by SEI and the Practically Speaking team, this is Matt Haller, and we'll see you on the other side of the mic very soon.
Thank you for listening to the Practically Speaking podcast. Click the subscribe button below to be notified when new episodes become available. Information provided by Independent Advisor Solutions by SEI, a strategic business unit of SEI Investments Company. The information covered and posted represents the current views and opinions of the guest and does not necessarily represent the views or opinions of Independent Advisor Solutions, SEI. Guests are not affiliated with SEI or its subsidiaries. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning.
Individuals and firms mentioned in this podcast are not affiliated with SEI or its subsidiaries. SEI has a minor interest in Advisor.